Good morning on Thursday, 26th of January, starting with my Elliott wave chart. But yeah, perfect hit of the red box. I showed you the past days after I said that we are making here a fourth leg and that we should see one more push higher. Nice rejection. So it was actually a liquidity grab and coming down now. I will show you my other chart, but what is more important here is to see what is next. If you can see, I marked this as the third leg in this cycle. So now I want to see that the possible correction levels. Oh, I already have it on my daily. Look here. I marked out start at the beginning of the second leg, and we do have 1, 2, 3, 4, 5 to the upside, and now we should do a correction in the fourth leg, if I'm right. Could be wrong, of course, but I have to rely on something, and this has helped me a lot the past weeks, and yeah. The correction in leg number 4 is usually going back to the 236 or the 382 level. That would be around 21,400. I have been talking about a fill of the CME gap, which is around 20,000 and a little bit lower, like here. I do think this is a move which is too big to do in leg number 4. So I can imagine that we do have a correction in the coming days to 236, maybe a bit lower, find support either here on the previous key level, or we drop back into this demand zone, and then we do a fifth leg to around 25,000, and that we then start a correction for the whole cycle, which, let's say 25,000. And let me remove some of this. So I move to 25,000, and then we have 1, 2, 3, 4, 5 in place, and then I could see a correction to a very normal FIB level, 0.5, maybe even a bit lower, 0.618, and that would fill the CME gap. This is not a guarantee, and I do have some variables here. First we have to see where 4 ends, then we have to see where 5 ends, but this is a wild guess, and after that more upside. When I go to the lower time frame, looking for that move lower and how to trade it, this is what I see. We had a nice rejection on that red box, coming back into that latest range, and now I go to the 50-minute. Actually, what I do see here is a strong move down, a bit of a bounce, but bears are not continuing the move to the downside. So I do think we can make this kind of move, and then over here at the previous range high, I will look for a rejection, and then I do expect a move at least to the range low, which is over here, or maybe even back to this demand zone, which is around 21,100. Now let me go back to what I said in my Elliott wave chart. Correction in leg number 3. $21,400, and I said here 21,000. 140 compared to, yeah, that would be a nice level to go back to. Not sure if we get it, but short term a bit more up to that range high. If we see a rejection, I want to short it towards 21,400 or a little bit lower, sweep of this into that demand zone, and then up again to make that fifth leg toward 20,000 25,000. That's it. For now, working out. Let's see if we continue like this and following my plan.